What's going on, everybody? As always, it's a blessing to be here, and welcome to UL Exchange. I'm Crypto E, and if you guys are new to this channel or you found this channel because of this video, then subscribe to this channel with the bell notification so you can be notified every single time I drop information-packed videos, just like the one you're watching right now. By that being said, today's video will be on, we will dig deep into how to get started in the stock markets for beginners or for anyone that's interested but that don't have the right tools and knowledge to make it easy for you to step into the game. By that being said, guys, don't be scared. We have a lot to cover, from what is the stock market, what do we start with now, the risk and benefits of investing in the stock market, how much money should you start with investing in individual stocks, ETFs, investment strategies, mutual funds, and accounts such as 401k, retirement funds, and many more to continue. So let's just get straight into this video. So just starting off by the question, what is a stock market? To simplify it, the stock market is basically where a place of trade occurs. So example one, person A can sell something to person B, and person B would have to give them the money, and then person A will be giving them like a paper or certificate of ownership of that company. So it's just a simplified version. What is the stock market? Is where sales and goods occur, and then with the aggregated buyers and then aggregated sellers as well. So that's the main definition of what is the stock market. There's buyers and there's sellers. Both ways can benefit. So tips to investors, number one, is start now. What are you waiting for? That's the number one thing. There's no other better time than right now. As you heard it multiple times, right now is the best time to start. Because the longer you delay it, as the longer you're missing your opportunities to make tremendous amounts of money. Number one. Number two, you're missing out on lessons you could be learning from your mistakes, or lessons you could be learning from your growth, or even good things, that good wins that is coming, and you can say aha, you can get an aha moment that you can continue to do your good things, or cut off the lessons that you have learned, or failures, or whatever you want to call them, and toss it aside. So number one thing is start immediately. The number two thing is buy the right investment. This is one thing I want to touch on. When you get into stocks or crypto or forex, whatever market you get into, but technically for this video we're focused on the stock market, pay attention to what you're buying. Do your own research, do your own due diligence, stay vigilant in whatever markets that you're into. But specifically in the stock market, number one thing you need to know is that the markets are highly manipulated. That is the number one thing. The markets are heavily manipulated. So don't try to go against the bankers unless you are very successful in doing so. But what I do as a strategy is stay close to the bankers. Whatever the bankers or Wall Street do, I follow to some extent. But not everything they tell you is the truth. So you have to listen to what they're saying. You have to, walk around, see what's going on, and avoid those mistakes. But buy the right investment. Number three thing is try to avoid individual stocks if you're a beginner. Individual stocks such as Tesla, Amazon, and such, Microsoft, Apple, all those type of stocks that you could be buying, I would suggest, you could buy maybe a share or two, whatever, but try to avoid them if you don't fully understand what you're doing with them. So try to avoid these. You can get in one position here and there, but do not invest in them unless you know the risks that come with it, because any of those stocks can go to zero. Same thing with ETFs, which we'll get into in a little bit. But these are just tips to investors to stay on top of your game, to not lose your momentum. So try to avoid individual stocks. If you really want to, again, do your due diligence, do your own research, and then get into them. But if you want to stick to the safer side, there's really nothing at the safe side, but there's a safer side in the sense that the S&P 500 usually returns at 10% annually. So you can stick with that one and keep investing in that one until you understand how the markets move. And then once you understand them, then you can invest in individual stocks. Number four is create a diversified portfolio. You probably heard it multiple times in a sense of specifically targeting the stock market. They say don't invest in one thing. Don't invest in one, just one specific company, such as we can call it Tesla or Apple. You can diversify your investments from Amazon, Apple, Tesla, Netflix, which I would not recommend Netflix, but I'm just naming them. Google, Facebook, Meta, all these things, and then just diversify your portfolio. But once you truly understand And once you truly believe in it, and this is just my personal thing, if you truly believe in that stock, then just go for it. But don't go all in. Don't just take out a loan on your house or something. Go all in. Still stay diversified. And we'll get into the biggest thing continuing on. Number 5 is be prepared for red days, month, or red years in the terms of bear market. You have to be prepared for it. It's one thing that I see that people are not prepared for it. And when it happens, when they just come into the stock market, they just buy something. They're like, oh, where's my $1 million ticket? Or where's my $100,000 I'm expecting to get? That's not how the game works. If it was that easy, everybody would be 100,000ers, millionaires, and billionaires. And that's completely false. Nobody can do it like that. Nobody can just come into the game and then make millions of dollars unless you have some type of knowledge of what you're doing. So you have to be prepared for the red days, and I said month or red years, because when the bear market hits and the markets come crashing, you have to be prepared. You always want to invest low. You always want to buy low and sell high. Buy low and sell high. You could do, just slowly accumulating your investment, so you can average down your cost if you're buying it high, but always buy low and sell high. That's a motto that it goes. You don't want to buy at the extreme high and then it goes down and then you want to sell. You keep losing money forever. So be prepared for the red market days and stop, so you won't overwhelm yourself. You see these crazy market trends and then everybody in the media is talking about it. Oh, stock market failure, and then you're already down 50% on your position. You sell, the next 2 months it goes up 200%. So don't be overwhelmed. Understand there will be some bad days, such as red days, months or years to come. So just be prepared for a market crash. Don't let it overwhelm you. Number 6 thing is backtest or see how other investment turns. Backtest or see how other investments turned out investing real money. So before you even invest your real money, check out the charts. Check out whatever you want to invest in. I'll keep using Tesla for this example. Look at Tesla. Check out their track record. Be like, oh, are they a good investment? Is this a cap for Tesla? What is a Tesla? Are they a car company? Are they a robotics company? What are they doing? They have so much going on that is whatever the price is currently, probably at 850 or 750. Is 850 the max Tesla can go to? If you don't think that's the max, then hey, you can invest in it slowly. Maybe you want to put in 10% of what you're planning to invest, and then when it goes down, put more. When it goes down, put more. When it goes up, put a little bit, and just keep on going like that. But always backtest and see what the company is about before you invest in. Number 7, stay committed to your long-term portfolio. See, the short-term gains is where it really icks people, because they want that quick money. They want to put in 100, they want to get 1,000 back. And this is not a gambling thing, but you can turn it into a gambling and keep losing, like the casino. So patience is virtue. All these terms you probably heard said multiple times over your lifetime. You probably haven't even used them. You hear these words and it becomes cliche to a certain extent that everybody's saying them, but if you're not implementing it into your life, then what's the point of even knowing these meanings? So patience is virtue. Stay committed to your long-term portfolio than your short-term portfolio. Your $1,000 investment right now can get you a $10,000 investment back. But if that is the cap, or that's what you're looking for, by all means take your money out. But if that is not what you're looking for, and saying, hey, the next 2 years, in the next 5 years, I do believe that $10,000 investment will go to 100,000, or the $10,000 investment can go to $500,000 or more. So always focus on the long-term gain or long-term portfolio than your short-term portfolio. Number 8, avoid short-term trading. Again, it hits on the number 7 previous one, options trading. Avoid options trading by all means unless you understand what it is. Options, a simplified version, is basically you can call a stock or you can put it, just buying it or selling it, and each share is 100 shares. Basically, one contract is 100 shares of that company. So basically, if I'm predicting today's date is Thursday, May 19th, let's say in a week from now, let's just say May 27, random date, I predict that Tesla will go from 750, let's say 750 is today, next week it will go to 850. If I predict that it will go to 850, I would have to call and buy 100 shares of Tesla for whatever price is given to me. And if I buy it and I hit it, I get the money. If I don't, whatever money you put in, you lose it. That's options trading. It's a very short-term trading, so before you even understand the long term, do not hop into the short term. So as we have covered these 8 important things, before we even get into where to put your money and all these things, all the 8 tips are very key. So if you don't completely understand them, start the video again, watch it from the beginning, but make sure you understand what's really going on before you even put your money into these investments. So the risk and benefits of investing in stocks. So the main goal of investing in the stock market, of course, is to beat the S&P 500. That's the main reason people are investing into hedge funds or different places where they can find investments that will diversify their portfolio, but also make them more gains, because the S&P 500 is just full with the 500 best companies in the United States, and that literally comprises of all those companies, and it's expected an average generated an annual return of 10% per year. So if you just want to get 10%, you're okay with that, that's cool. But the average investor that's coming in with $100, or even $1,000, 10% of $1,000 is what? $100. $100 on your return on your investment is okay, but it's nothing compared to what you can get by investing into different investments, such as Amazon, probably been up over 300-400%. So if you want 10% gain, and make sure that you are able to get it, because there will be some days that, or some years that it won't hit those 10% marks, and it will come down. But if you want the safer side, that's where people really tend to go to, which is the S&P 500. So after all this, we will take a look at where to start investing in stocks. So many platforms such as Webull, Robinhood, TD Ameritrade, and many more are available to where you can put your money into them. Whichever one you like, I have all the links for them in the description. You can click on them, sign up, and get yourself some free stocks. And Webull is offering many stocks as well. So if you're interested in that, click on the links below and sign up, create your own account. But you can look through whichever one interests you, whichever one has a better UI, user interface, whichever one pleases you. Or if the user interface does not matter to you, you just want to, see, as long as you can see the stocks, as long as you can see buy, as long as you can see sell, you're okay with it, then take a look at all these descriptions that I posted of these links, and then whichever one you're interested in, sign up for those. So those are the platforms to buy and sell stocks on. So how much money should you start with as a beginner? It's a very good question that I get asked all the time, but the ultimate decision is always up to you. But know that the more you put in, the more you can gain, but they are also associated with more significant risk and bigger returns. Also, fractional shares, which is buying slowly. So one share of Tesla costs $8.50, let's say. You can buy fractional shares of it. So instead of buying the whole $8.50, if you only have 100, you can buy 0.01 or whatever amount of shares. You can buy 0.1, and you can buy 0.002, whatever amount of shares that you have, or you can buy $200 worth of Tesla, $10 worth of Tesla. But if you want to keep accumulating more as time goes, then do that. But it depends on you. Just know that though, the more money you put in, the more money you can get returns. But also, the more money you put in, the more money you could lose. The less money you put in, the less money you can get returns on. The less money you put in, the less money you can lose. It just depends on you. What are you trying to get, and what is your goal from investing? That's the key as well. What is your goal from investing? Don't forget that. Is it just to make those quick bucks and then move on by your day? Is it make a stable income of, let's say, $1,000 per month, $5,000 per month, or just make $200-300 per month extra on top of whatever else you're doing? So always know your goal and outcome. So have an investment strategy. That's another key point. Have an investment strategy. So let's say you wake up on Monday 8:30. Let's say you wake up on Monday 9:30 when the bell rings, and that's your perfect timing, and it works for you. You have tested it, you have back tested it, and everything's working fine. Then stick to your routine. But also have an investment strategy. Instead of just looking at mainstream media and tell you to invest here, invest here. Don't just buy through all the BS that you're seeing. Have your own personalized investment strategy that works perfectly well for you. And to get that, and to get to that level, you have to test. There will be some failures, there will be some successes, but compare those two and neglect the failures, as in never do them again. You won't do the same mistakes again, but just copy your successes. Just copy it. Just Control-C, Control-V, copy and paste it over and over again, millions of times, and you will become extremely successful. Investing in the individual stocks, as I mentioned previously, is your choice if you completely believe in the company. As always, do your own research. I'm not an investment advisor. So, invest in stock ETF. What is a stock ETF? ETF is exchange traded funds, a basket of securities you buy or sell through a brokerage firm on a stock market. So you can buy ETFs. Let's say there are 10 companies that you want to buy an ETF of. You can buy it. And if you feel that is much safer than investing in one single company, then by all means do that. There's many ways to invest in the stock market. And you can also invest in the stock mutual funds. Accounts you want to invest in. These accounts I'm suggesting because these are mostly known or mostly presented to beginners, but me personally, I would not invest in them because so much inflation has going on. We would not even know if our social security money is safe, if the 401k money is safe. But accounts you want to invest in are retirement accounts such as 401ks and taxable investments. Or you can even do the Roth IRAs, and I believe that's $6,000 per year that you can put in, which you will get zero tax when you turn 50 or 55 and you take it out. So that's very good as well. Keep on putting your money into a Roth IRA. And the final reminder, this would have became an extremely long video. I want to make it a condensed version of introduction to stocks. But the final reminder from everything you understood, everything we have talked about, and if you don't completely understand it, as always, you're welcome to go all the way back to the beginning and watch the video. But the final reminder is stay safe and vigilant in these markets. The markets will hunt you and make you bleed. That's completely true. Sad to say, many people, even because of the incident that has happened with Terra Luna, some people have committed suicide. It's very sad to hear, but you make your own investments. Do not invest more than you can handle. That's the main thing. Don't just invest in it because you see it's a hot topic right now. It really hurts people to invest in them. You know, it's like basically the FOMO, fear of missing out. You see a lot of people talking about, you see everybody you hang around was talking about it, and you're like, well, they're making money. Let me just put $1,000 here, and then you lose $1,000. So always be careful. And don't put more than you are willing to lose. That's the main thing which I have just touched on. And don't gamble just because someone said it, or someone you heard on TV was saying it was a good stock to buy. So as always, guys, do your own research and never put your money where someone's mouth is. Put your money where your mouth is. By that being said, guys, I appreciate you guys for tuning into UL Exchange. I'm Crypto E. God bless you guys. Do not forget to subscribe to this channel and like this video. More videos coming out very, very soon. And this is an intro to stocks for beginners, intermediate, or advanced. Whatever level you are on, we still have to implement these rules. With that being said, guys, I'm Crypto E. I love you guys. I'll see you on the next video. Peace out.